Hi everybody, this is Gary Dean with Sentiment Timing, and this is our free technical video report for Wednesday, May 29th, 2019. I hope you guys have been managing this little bit of a volatility move that we've seen lately, and I'm going to go over in the report. This is pretty much exactly what Woody's been talking about since February, which is the crazy part. And this is what I'm going to show you. So a lot of what we do has to do with the predictive analytics model, and that has to do with time, and that's what I'm going to show you tonight, and that's the bearish time period that Woody had projected in February. And sentiment is going to change on an intermediate and a short-term basis, and so really what we want to be doing is trading whatever the time is going to be telling us, but really where sentiment is on an intermediate term basis, because on a short term it's just going to mark some short term tops and bottoms, but the overall trend should continue, and we use the technicals to try to figure all of that out. So let's just show you a little bit about the timepiece, and this is a piece that I put in that trader view, and it's can the stock market really be predicted? And these are a series of predictions that were made from September that Woody had made. So as you can see, this is our from our newsletter that we put out on 9/13. The expected was for a correction profile to last into the 9/25. It didn't do it, and that's the thing is the model's not going to be 100% right. All these dates aren't going to be 100% right, but it only means that if they get ignored, they get ignored for a very, very short period of time. So the 25th, and we know that it was actually on, I believe it was October 1st, when the big kind of crash took place into the December time period. So this was, we were looking for what was going to take place on September 25th. It kind of got ignored, but from there, I believe that the market topped 2 days later, and or 3 days later, and from there we saw one of the largest drops we've seen in over 10 years. That was 600 points. So now let's move to 1016, because this was looking for that top period. And here you can see it's what he's saying. I still foresee a notable relief rally in November that may be followed by more weakness than anybody expects into year end. So if you kind of remember what took place, it was right into year end. The low was made on December 27th, and from there we saw the S&P rally into the 600 points from that particular low. Now, if we take a look at the February 14th, here you can see that what Woody is saying is that the interim diagnosis is that the trend still allows for recovery rallies by fits and starts into at least early April, or perhaps even into June. So when we got into the April time period, Woody had said it's not this, it's probably going to take place sometime in June. So each one of these, we knew exactly ahead of time what to expect, when to, because what the problem is with the perma bulls and bears is they'll take a position, they'll be right for 200-300 points on the S&P, but think that the S&P's crashing 1,000 points, and will hold on and watch that move go right down the drain, and the DM get stopped out without a gain. And the same goes with the bulls that are buying at 2,600 and got into a great trade up to the 2,950 and held on to it because their expectations is it's going to 5,000, and they're not anticipating that these swings are big. And for the most part, your emotions will take hold of the trade, and even if you're looking in the right direction, it will make you think you're wrong, and you'll get out of a position right before the move is going to take place. And that's really one of the biggest advantages that we offer, is you get to control your emotions, because you're anticipating when the next top is coming. You have these dates that Woody's giving. You're anticipating when the next low is coming. And as I said, from the predictive analytics model, when you know where the time is, now what happens, you start looking at the sentiment and the technicals. So on a short-term basis, this is the where we were going into May 1st. We were in euphoria, and right now everybody was buying up here because the the financial news media was telling them that we were going, this is the next early stages of the next bull market. Now people are in panic mood. So this is what I mean by let's say everybody's right and we are in the beginning stages of a bull market. I don't believe we are. But this move right here is washing out all the people, and most likely they're not going to jump in until you start seeing the thrill and the euphoria. And that's why so many people lose money in the market. It's not that they can't get on the right side. Their emotions take advantage of them, and they end up doing the exact wrong thing at the exact wrong time. And it repeats over and over. And I've been doing this for 5 years with Woody, and I can tell you firsthand. I watch it, and I watch how these people get extremely bullish at the exact tops and get extremely bearish at the exact lows. So if we take a look on the intermediate term, we're only right here, and that's why Woody's saying this kill zone and this black hole. We're in the very, very beginning stages, because by the time that ends, this is going to be into this area here, and guess what? It's going to set up the next great buying opportunity, just like it did in December when everybody was looking, saying that the next bear market had started. So here you can see the sentiment. Everybody getting bullish at the top. We start getting drops. Everybody gets bearish, and these are the short-term moves. But the thing is that it's just showing you that people get lured in and lured out by just seeing everything that's going on in the markets. So this is just from our latest report, and you see a lot of, say, redacted time periods, because I can't give you those. We're a for-profit business, and if I give you guys all the dates, then what's the sense of anybody paying for our membership? It's a unique system that we run, and it's nobody else in the world can offer it, because nobody has the tools that Woody Dorsey has. And combined together, like I said, we're not going to be right all the time, but what's going to happen is, even when we're wrong, it's usually wrong for a very short period of time, because when the predictive analytics model goes from intermediate term bullish to bearish, things change, and they change in a hurry. And if the dates are off, they're usually off by a week, if that. And from there, you see the market really take off in the direction that he was predicting. So this is what the bears broke through today. Bulls have to get it above the 2,800. If they do that, I wouldn't be surprised to see 28.22 and possibly a stretch for 28.40. If these lows are taken out, my guess is they're coming down to the 27.39 level, and more likely they're coming down to this support level at the 27.20. And my reasoning for that is also the 32% retracement level that I've been saying that we most likely will be a magnet, because we didn't have one single 23% retracement on this entire move up, and that's very rare. Typically, you'll get moves and then you get a 32% retracement back up. That's what I meant to say. We didn't have a 32% retracement. So when that happens, this market gets very, very extended. And what the danger part about it is, if this low gets taken out, you can see there's really not a whole lot of support here, because we didn't have any dips. So I think that the bulls, until they can get it above this 28.52, they're still in very, very deep water. If the bears can take out these lows, expect to move down to the 27.40. I still believe this 27.20 is going to be a magnet. We don't have any bullish divergences. This is, again, the zone right here. I think there's a lot more work on the downside. And as Woody had put in the latest report I put out, this black hole kill zone is a very, very rare pattern that pops up, and it's something that it's even hard to manage, even when you're on the right side, because they move so fast. And it's a rare opportunity for traders, because there's going to be many points that are going to be coming up on the downside. But as I've said many times, that you might as well have the person that created these patterns, the kill zone, the black hole, manage you through them, because what is going to take place is we're going to get these massive moves, And then from there, we're going to get a very, very low sentiment reading, and that's going to mark a low. And as we know in this market, especially when it's going down, is that we get very, very big counter trend moves very fast. So this will wash out a lot of shorts, even though we may end up dropping 300-400 points on the S&P. So there's a lot of money to be made. And as I said, if you're sitting there and you're managing your portfolio or managing trades, I would want this information from the person who created it. I wouldn't want to try to do things on my own, because you've seen how accurate he is with these dates, and having the sentiment that's on your time period really, really makes trading a lot more easier. So with that, have a great night, and I'll talk to you at another next update.